Hello everyone, welcome back. Today. We are dissecting a massive update from JPMorgan on Datadog. The ticker is DDOG. Okay, following an exceptional Q1 print, JPMorgan didn't just raise their estimates. They nearly doubled their price target from $200 to $320. Okay, well, why such a violent move? Let's take a look at DDOG Datadog's chart. Okay, let's take a look at this chart. Where we can see that since Datadog's IPO, it gets closer to its historical high, his point, right? Well, the stock price moved violently, right? Get close to the historical high. Cause Datadog has a surprising profit, surprising financial earning report, right? So why did it happen? Let's come back to the report, okay? Here we go. So for years, the bears argued Datadog was just an inference play, monitoring the output of AI, but this report suggests we are entering lift-off mode. Datadog has officially cracked the mode on AI training workloads, winning 7 and 8-figure deals with the world's largest hyperscalers. We are looking at a fundamental shift from a nice-to-have monitoring tool to the essential nerve center of the AI revolution. Right? We can see that the price target, the prior price target from JPMorgan given to Datadog is 200, right? Now, JPMorgan update Datadog's price target to over $300. Why? Let's take a look at this report. So we can see that the key takeaway: strong Q1 beat with fourth consecutive quarter of revenue acceleration and the broad-based strength. Q1 total revenue growth of 32.2%, lands well above street consensus by 6 points of growth. That's why it goes up strongly, right? So the core highlight is here. There are triple threat. Datadog isn't just winning on hype. The numbers are doing the talking. There are 3 pillars to this outperformance. First, financial acceleration. We just talked about it, right? The revenue acceleration over 30% and well above the street consensus by 6%. This is it isn't just luck. It is broad-based strength across both AI native and non-AI customers. The second one is the land and expand beast. Their go-to-market execution was record-breaking. New logo bookings hit an all-time high and the average land size more than double. People are not just buying Datadog, they are starting big. Hey, can you get that? Here. Why new logo average land size also set the record and more than double, right? Here. Okay, last but not the least, product stickiness. 85% of customers use over 2 products, but the real wow factor is at the top. The number of customers using 10 or more products nearly doubled to 11% this year. Once you are in the Datadog ecosystem, you don't leave. Right here, product breadth continues to expand, with 85% of customers using more than 2 products, 56% over 4, right? I don't read it one by one. You can read it here, right? All are the core highlights to Datadog. Alright, let's take a look at the logic. As a research team, we don't take strict high targets at face value. Let's look at the friction point JPMorgan might be glossing over. The conservative guide track. JPMorgan claims the H2 guidance of 22% is conservative compared to the Q1 32%. Let's take a look. Let's go down. It should be here. And we can see that the AI lab relationships over the coming quarters as the broader set of frontier. AI companies faces the same operational pressure around fragment, internal tooling, and engineering productivity. Okay. And here at the midpoint, FY26 total revenue is raised by $214 million, nearly 5 times the size of the Q1 beat versus guidance of $50 million. Well, very amazing, right? Under the valuation extremes, the target of 320 is based on 72 times EV free cash flow. Well, it should be here, right? The valuation, it is about the valuation. JPMorgan 320 target is based on 70 times EV, right? And there are multiple for DDOG shares is at a premium to the fast-growing infrastructure software vendors comp set, which trade at 61 times on average. So JPMorgan justifies this premium through AI growth factors. However, paying a 72 multiple on earnings 2 years out leaves zero room for execution errors. So any acute execution risk or slower sales ramping could lead to massive multiple contraction. The target is attractive. We also need to have some question about this valuation, right? Okay, the final take is here. Datadog has moved from the observation deck to the cockpit of AI infrastructure. If they execute, 320 is the moon. If they stumble, it is a long way down. So what's your move? Okay. Let's take a look at the chart again. So the chart is very strong, right? Can you see that? This is the long term since its IPO. We take a look at this short term chart. From the very beginning of 2026, it is a downward trend, right? Well, we have already get the logic why JPMorgan has given a great target price, right? We also need to pay attention to the price action. So we take a look at the short-term chart. So from the very beginning of 2026, it's a downward trend, and then it is a head shoulder bullish pattern. Well, and with the RSI getting higher and higher, then with surprising financial earning report, it hit the historical high again. The problem is that, hey, can you see the red circle? Can you see the red circle here? The RSI is overbought, right? The RSI indicates the price is overbought. So even though JPMorgan give a potential attractive price target, now the chart tells us that it is overbought now. The risk is high now. And can you see the square, the black square? right? There's a huge gap. So it probably, the stop price is probably will cover the gap. Then I think the correction will give us a chance to enter and to enjoy the trip to the target price 320. All right. So what's your move? This is our analysis. And if you have any questions, let us know in the comments. Okay. See you the next one.